Well, good afternoon here in London, and welcome to another FS Club webinar on 4 ways investing in technology can improve the employee experience. And it's my delight to have a guest dialing in from America, Patrick Luther. Now, you'll know me. I'm Michael Mainelli. I'm one of the directors of Zien, and it is my privilege to introduce today's webinar and to chair the discussion. The outline for the webinar is pretty standard if you've been to a few of these before. I'll be speaking for approximately 2 or 3 minutes, hand the floor to Patrick. He'll be giving a presentation of approximately 25 minutes, and then we have adequate time for comments, questions, and observations from you. I would like, of course, to point out that we have a rich and varied group of sponsors, of which Ceridian, Patrick's employer, is one. But it's not a requirement to be a sponsor to be on the program, as many of you will also know. So we're here because Patrick and the team have got some very interesting things to say, not just about technology, but really about the relationship of firms with their employees and how technology can make that happen. Now, just before I hand the floor to Patrick, a reminder that I'll be feeding the questions, comments, and observations into a discussion with Patrick about his topic. Please use the GoToWebinar question facility to send me those questions, because if you email them to me, guess what? I'm here with you online, so I'll only see them afterwards. So I'd really appreciate, please do get your questions, comments, and get them in early, because we often don't have time to address them if they're not early enough. Well, with no more than that, Patrick, the floor is very, very much yours. Thank you.
Well, thank you very much, Michael, and good afternoon to everyone today. Welcome to our webinar. It's good to be talking to a UK audience. I'm very happy to be part of today's FS Club presentation. Next slide, please. So, as Michael said, my name is Patrick, and on behalf of the team here at Ceridian, I just wanted to extend a very warm welcome to all of you. Real briefly, a little bit about my role here at Ceridian. You may or may not be familiar with the title industry principal, and what that means is that unlike the vast majority of roles at Ceridian that are focused on all things HR and HCM software related, I am focused very much on the industry of financial services, and it's my job to ensure our products, our marketing content, all of our sales interactions bring that appropriate industry perspective. Next slide, please. So for our agenda today, as Michael said, we've got about 30 minutes or so of content. I'm going to just real briefly do a level set on the financial services and the overall snapshot of the industry, look at some facts and figures related to COVID and the impact on the industry. And then we're going to segue into technology. Why is technology so important, especially to an industry like financial services? And then we'll cover 4 ways that we believe tech can help build a great employee experience. And then hopefully a few minutes left at the end for some Q&A. Next slide. Let's just take a quick review of the current state of the industry. This is a financial services audience, so I think one metric that all of us are very comfortable with is the stock market. And the chart I have here on the left is giving us a view of the relative performance across the major industry segments for the last year. And I'll just kind of call your attention to a couple things. The purple curve, the second from the bottom, represents the financials. And it's pretty clear that financials have not done well to other industries. But I think that's really an oversimplification. There's more stories under the covers, and we need to look at the various subsegments to understand what's really going on. So, yes, the overall business environment is less than stellar, but looking at insurance, for example, business interruption claims are up. So if you're in that industry, there's some headwinds. But if you're in auto insurance, claims are way down. The shelter in place is causing a massive reduction in the amount of driving, so that's helpful. If you're in the mortgage industry, it's been gangbusters in terms of volume, lowest interest rates in decades. It's driving massive amounts of refunding. But for mortgages, really any other lending, other than those associated with pandemic-related loans, are definitely underperforming in terms of volume. Credit cards, payments, transactions, definitely less volume there. But asset managers, the security industries, trading platforms, exchanges, there's a lot of volume here. The markets are really doing well. as evidenced by the return since the bottom of the pandemic lows. And then looking at investment banking, certainly M&A and IPOs kind of cratered right after the initial pandemic recession in late March, but recently there's been a relatively strong rebound there. And then just kind of the silver lining on all this is, yes, financials have performed second worst of all of these industry sectors, second only to energy. But if you look at the chart in detail, you can see starting right around the vertical line representing the beginning of November, that in the last 3 to 4 weeks, the financials and energy have really dramatically outperformed the overall. And then there's a couple. The timing of that reversal had a lot to do with when Pfizer and Moderna announced the results of the successful vaccine trial. So I think this is just, I think, an excellent indicator of a likely strong rebound in 2021 for financial services. Next slide, please. So I also wanted to kind of just give a perspective cross industry. If we look at the top, look at industries like manufacturing, travel, transportation, retail, energy, I don't think it's a big surprise that these industries are ranked here as the most impacted across these parameters we're looking at. So they include personnel, operations, supply chain, revenue, and then overall. On the flip side, public sector, financial services and insurance and higher education are the lesser impacted. I don't mean to say that these industries aren't impacted, but I think on a relative perspective, certainly not as dramatically as industries like retail and energy. Next slide, please. So we also wanted to show you some results of recent UK specific studies. The first one was a manpower survey done for HR executives within financial services, and the first data point was their employment outlook for Q4. That was down 6%, and compared to year over year, same quarter, down 14%. But that's really not a surprise. If you think back to a year pre-pandemic, the fact that we're down 14% is probably not very alarming. But I think the positive here, takeaway, is that is the quarter-on-quarter change. The Q3 to Q4, while still Q4 still being negative, we're seeing a reversal and change, the improvement from how bad it was in Q3. I think that portends an optimistic outlook for employment in the industry in 2021. The other sets of data points are from a HRD Connect survey for human resources directors. A couple of topics. One of the questions that they asked these folks was, what are your top priorities in terms of investment? And tech came out at number one, at 20% of the respondents. And within tech, the specific area they were looking to drill in terms of focus was people analytics and workforce planning. And they also asked them, where is the biggest opportunity? And again, at the top of the list was tech advancement. So clearly, tech is very important to HR. It's also important to financial services, as we are probably very well aware of. Next slide, please. All right, so right now we are ready for our first polling question. I'm going to just briefly turn this over to Michael for the polling, and we'll take a look at the results in about 30 seconds. Hey, I think you're on mute,
folks. How would you rate your company's tech intelligence quotient, IQ, compared to peers? Would you say it's more advanced, about the same, less advanced, or you don't know? And just use the facility there that's come up on your screen. I can see the poll opening at the moment now. We're getting responses together. Over half the audience has voted. Just going to give it just a little bit more time for you to find that button. They're all fairly quick off the mark, though. Okay, and I think we're ready to share it now. So, as you can see, actually, people believe that their firms are above average on balance. So, a bit like Garrison Keillor, where the town Lake Wobegon, where everyone is above average.
Everyone is above average. That's great. I mean, and that's really not unexpected from a financial services audience. This is an industry that clearly sees the value in technology. and recognizes it as a differentiator. So I'm not surprised by that set of respondents. All right. So we kind of have an idea where everyone's coming from in terms of their technological IQ. Let's talk about why technology matters so much. Next slide, please. So technology is all around us. It's in our personal lives. It's clearly in our work. And it's really hard, I think, to find an industry that's not seeing major impacts from information technology. And I just wanted to show you this chart on the right to illustrate the importance of technology. And what I have here is this is a 10-year view of two major indices. The S&P, which the equivalent in the UK would be the FTSE 250, kind of a basket of across all segments of the industry. And the other is the Infotech Index. And looking back 10 years, the first 3 years or so, these roughly tracked, in parallel, very much in lockstep. And then somewhere around year 3 or 4, we started to see some separation, some decoupling. And over the last 3 years, it's really accelerated dramatically to the point where today we're seeing roughly doubling of the information technology return versus the overall market. And there's a couple of things that we can, I think, take away from this. One is the overall importance of information technology in our economy. It's becoming more and more important. This is reflective of that. The point, I'll draw an analogy here to national defense spending, right? During times of war, global uncertainty, defense contractors really well supply the tanks, the helicopters, the ships. And my analogy here is that I think the IT vendors are kind of playing a similar role to industry today. They're supplying this key infrastructure to drive profitability, differentiation, and it applies to all industries. I think it's especially important to information industries like financial services. Financial services as an industry spends more on IT than any other, and it's just another metric of how important IT is to the growth and profitability of financial services. Next slide, please. So now we've explained kind of how tech impacts the overall economy and the workplace in general. Let's kind of transition into more of the HR aspects and where tech plays a role. So one of the challenges that we're experiencing in all industries is this generational shift, and it's having a big impact on the demographic makeup of the workforce. And one of the things that's happening now is that there are 5 generations currently in the workforce all at once. And all of these have different needs and expectations from the standpoint of employee experience. And this is a challenge because these different age groups likely have very differing requirements in terms of how and where they consume information and what their preferences are for interacting with their employer. We're going to go deeper later in the presentation. Next slide, please. And another challenge is the customers are expecting, their expectations have risen dramatically as a result of technology. And your employers have expectations. Financial services, as a former consultant in that industry, companies in this industry spent huge amounts of money on digital transformation projects, creating these more personalized experiences for their customers. But at least with regard to retail clients in financial services, the employees and the customers are in many cases the same people, right? If any of you in the audience were looking for a new bank today, would you consider a bank that didn't have an app available for you to do routine banking functions in the convenience of the mobile app experience? And I think the answer is probably no for the vast majority of you. And so I think it's safe to say employees, they want the same kind of level of sophistication when it comes to their internal systems at their employer. Next slide, please. And finally, technology matters now more than before because of the pandemic. We have lots of people working from home, and that's likely to continue into the foreseeable future. And all of this disruption requires lots of technology to facilitate change. So technology for training, technology for communications, technology to ensure consistency in this decentralized work environment. Next slide, please.
So here we have And this poll is, folks, if you could, hands-on buzzers, how would you rate your organization's access to learning resources that help to build tech skills? Excellent, good, average, needs improvement. Patrick and I are unable to vote. Patrick, you'll be pleased. The audience is off the mark very swiftly. Over 50% voted in less than 15 seconds, which is impressive. But I'll leave it open for just a few more seconds there to collect a more complete response. And that's great. And we'll have a look at the results, which are pretty good. We're still in the above average territory here, with 58% of the audience rating their organization's access to learning resources that help to build skills good. Over to you, Patrick.
Okay, thanks. Thank you, Michael. So the one thing I would say, kind of a takeaway here, is we see this as kind of a strong indicator of future success for many organizations. So companies that are embracing learning, they tend to be kind of on the forefront of shifts in consumer behavior, and they can adapt quickly. They're more agile, so they can keep and grow market share. And the companies that are not tend to be the laggards, and the ones that have trouble maintaining market share. All right, next slide. So up until this point, we've really just focused on the problems. What are the issues, the pain points? Let's kind of now talk about some solutions. What we're suggesting here, that there are 4 technology levers that we believe can help drive great employee experience. Those 4 are personalization, consumerization, wellness, and next slide, please. Building a great is really understanding that we as employers need to personalize the workplace at the individual level as much as possible in order to get the best work and the highest level of engagement. We talked about the 5 generations in the workforce today. Each of these has different characteristics that's going to be driving them. On the one end, the spectrum, baby boomers who are nearing retirement. This really influences their specific needs at work. And then on the other end of the spectrum, millennials and Gen Zs, they're likely looking at work and what they want to get out of work in very different ways than older generations have. So I think the takeaway here is that there's a lot of diversity in the workforce from a generational standpoint, that having kind of a one-size-fits-all approach is really not a winning strategy. The question then becomes, so how do we go about creating a personalized experience that's going to balance what the company's trying to accomplish, but also what the individual wants? Next slide, please. So the aim is that we ask them, right? That's the first place. If you're going to do any kind of personalized experiences, is to make sure you have a deep understanding of your employees. And this is nothing new for companies. Companies have been doing this for years through focus groups with their customers, right? Through focus groups. They call it now, it's called voice of the customer efforts. So this has been going on for a long time. And we're suggesting that really a similar approach needs to happen with the employees. Employee surveys are a big part of this. And most of the leading HCM platforms, they provide this type of survey already embedded into their systems that give you full customization, as well as the analytics tools to analyze the result and draw insights. And from a best practice standpoint, we would suggest to not rely on that one giant annual survey, but it's too infrequent. It can miss critical factors that happen in shorter time frames. We recommend using regular pulse surveys, slicing by departments or departments or lines of business, and then use them in conjunction with other employee feedback methods to make sure we're getting an accurate pulse on really what is making the employees tick. Next slide. So the second strategy for leveraging tech to build a great employee experience is what we call consumerization. And this is really kind of replicating what people love about interacting with consumer brands, but doing it inside the organization, treating your employees like valued customers. Next slide. Consumer brands are very successful when they make it as easy as possible for customers to consume their products or services in financial services, think of new functionality that wasn't around 10 years ago. Capabilities like being able to scan and deposit a check through your phone without having to go to the bank. Being able to move money with a swipe of a finger or thumb, trading stocks from your phone, initiate an auto claim. All of these modern advancements are what makes customers love our companies, and the workplace kind of needs to follow a similar model. And employees are starting to expect it. This survey here by Willis Towers Watson, over half of employees feel their employer needs to understand them as well as expected to understand the customers. And really from a technology standpoint, what we're talking about is that wherever possible to have those modern web interfaces or mobile app that make it easy for employees to complete tasks. So you want these apps and interfaces to be modern, not feel like they were built 20 years ago. Instead to feel similar to the ones people are using in their personal lives. And this is going to just accelerate the adoption and reduce the learning curve. Next slide, please. Another area that consumerization is especially important is in learning. So in HR and HR technology, we call this they call learning experience platform. That's the term. And these platforms have evolved really to mirror consumer apps in the area. At Ceridian, I'm not ashamed to say we've borrowed very heavily from this concept and how we provide access to our learning capabilities. And really, it largely mirrors the experience that you would see by using like a Hulu or a Netflix. So having the ability to preview content, to see an icon of the various training modules and the dashboard like Netflix menu, to have group categorizations of your content, to be able to stop the training and then resume it at a later point in time, exactly where you left off, to have suggested content based on maybe previous training materials you've taken or maybe based on your role in the organization. These are all examples of features that Netflix has, and they've made their way into learning platforms. And this creates familiarization, and so people can just very intuitively pick it up and adopt them without any real training. And one other area with learning platforms, it's also a great way for knowledge transfer. So we talked about these baby boomers that are retiring. These folks have a lot of company knowledge in their heads, and one way to sort of get some of that knowledge out is through the use of training videos. If a certain person is an expert in one area, they keep getting asked how to do a certain function all the time, they could create a video, upload the video. Now it's available for anybody to use, and you've effectively, at least in that particular area, made great use of knowledge transfer. Next slide. So one area where employee experience is very often overlooked is in the area of wellness, and technology can play a big role here. Now, what wellness, it encompasses a lot of different categories. It includes things like obviously your physical and your mental health, but also stress management and financial stability. It's really important that organizations look at this holistically, and they think about building a tech-driven wellness initiative for their employees. Next slide, please.
And here we get to our final poll, I believe. How important is financial wellness to your organization? Very, somewhat, not very, or not at all. Financial wellness to your organization. And we have a group out here who are desperately racing to increase their speed, and they've done it again. So well up 60%, 65% at 15 seconds. I'll give it just a second more. Great. And we'll just close that poll and have a quick look. So we have here very important wins this time. And back to you, then, Patrick.
Well, that's very positive news. And I think more and more companies, especially companies that are really battling for talent, recognize this as a way to differentiate and to attract talent, especially some of those younger workers, the millennial and Gen Zs, who put a big premium on this kind of benefit as an employee. And now at Ceridian, I think, we really believe financial wellness is an area that shouldn't be overlooked. What it means is offering programs that address the complete financial picture, including health benefits, retirement planning, as well as the statistic on this slide. I think that suggests the problem with financial wellness is very real, but yet 40% of respondents have no mechanism to adequately address this. Next slide, please. So one way to help address some of this short-term debt-related financial pain is through an emerging product. This is a relatively new capability. It's called on-demand pay. And what on-demand pay is, it's technology that allows employees to get paid in advance of their payday. Now, a little bit of background on payroll for those of you who may not be familiar. Typically, pay works in arrears. So at any given point in time, you have worked time on the books for your company that you have yet to be paid for. And what on-demand pay does is it provides a window into that owed money, and it's fairly sophisticated. It has a deep understanding of what are all the deductions and tax components, so it has an understanding of exactly how much money is coming to you at any given point in time. And it's a tool for you to allow transfer of that money into an account that you control. Now, as an employee, just think about how that might make use for somebody who maybe is experiencing an unforeseen emergency, a financial expense that maybe they didn't have enough money in their rainy day account to cover it. This is a tool that allows them to get access to money free of charge. And it avoids you from having to go to higher cost debt solutions like a payday lender, like job, maybe like taking out a loan on your credit card that are charging 30% plus interest rates. So there are clearly benefits to the employee for this kind of capability. Also, from the employer standpoint, think about reducing the financial stress on your employees. Obviously, that's going to have impacts in terms of productivity, maybe reduced sick days because they no longer have to deal with these problems. But the other, there's some emerging studies, and because this is relatively new, there's not a lot of data on this, but emerging studies in the U.S. that suggest that this type of functionality can be a powerful recruitment and retention tool, especially for younger workers who tend to be more of an on-demand type of mindset in terms of needing their money today. So there are studies that suggest this is a powerful tool for that. Next slide, please. Now, I mentioned there are several vendors who provide this. Ceridian has a version. It's called Dayforce Wallet. And I'll explain real simply how it works. So there's really two components. There's an app that you would download from the App Store or from Google Android, and it's also linked to a debit card, a pay card. And so, as I mentioned, you would connect this through your payroll system. You would have visibility to your net pay owed to you, and you have the ability to transfer that into this account called Dayforce Wallet. And from there, it's immediately available on the debit card, so you can use it anywhere that MasterCard is accepted. Alternatively, you could also transfer it to an account that you control. So maybe your checking account. If you had an upcoming payment that was underfunded in your checking account, you could move money there to avoid an overcharge fee. So this is just Ceridian's version of on-demand pay. Next slide, please. So finally, we have culture, right? The pace of change today, it's quickening. Technology keeps changing. Roles your organization has continue to evolve. The skills that matter keep changing as well. And I read a recent study about the shelf life of any given skill set, and they said it's only about 5 to 7 years. So unless you're constantly updating your skills as an individual employee, your value to your organization is going to erode over time. And just to be clear, I'm not putting this all on the individual, right? The employer definitely has a significant role here. They need to create the environment and the support infrastructure to drive this kind of attitude of constant learning into the fabric of the organization. And much of this is the mindset is driven by culture. Next slide, please. So the Gallup data point on this slide is, I think, a pretty strong evidence of what I guess characterizes a suboptimal trend with regard to engagement in the workplace. And I think it's safe to say that culture and engagement really go hand in hand, right? There are a few ways technology can help in an environment like we're dealing with today with a largely decentralized workforce. One of the ways is to make sure our people, we align the work that people do to the organization's goals, and we're making available in their performance management, in their training, in their succession planning. So employees and exactly how their work and their progress is helping to move the needle for the company. In other words, we want to just make sure that there's this direct line of sight to, or at least some linkage between the goals of any given department or function or line of business and the overall corporate goals. And the last example I'll use here is for technology assisting with culture is through collaboration tools. We're using one right now. You're all likely very familiar with collaboration tools. And basically, they connect people, make it easier to interact digitally. At Ceridian, we use Microsoft Teams. We also use Zoom. And one of the great things about Teams that I really find of value is that it removes this problem of version control. In my earlier career, prior to Teams, I can tell you there's many instances where I'm working on a PowerPoint deck with a group or a team of people, sending it across to different folks. Different people are editing it at different points in time, and it's just a nightmare. Cause a lot of errors, a lot of rework. But with Teams, this largely goes away. But it only goes away if your company sort of embraces this capability and stops sending the PowerPoints through emails, but instead takes value or use of this great feature within a product like Microsoft Teams. Next slide, please.
And the definite final poll question, I miscounted there. Yep. Which of the four areas outlined today do you think can have the biggest impact on employee experience in your organization? Personalization, consumerization, wellness, or culture? And everybody's kicking off very fast again, as ever. Real sign of engagement here. Just over the 2/3 mark, up to over 3/4, great. And almost finished. Super. So we'll present the results. Culture wins out pretty clearly, but wellness was also very high.
Okay, that's a surprise. I've done similar webinars to various audiences in the U.S. and culture was never at the top, so that's a first for us. But also interesting given the audience. So thank you for that feedback. So that was all I had in terms of planned content for today, Michael. I know we've got some time set aside for questions. I'm happy to answer any questions from the audience.
Let's get cracking. Well done, Patrick. That was really quite riveting. I was picking up quite a bit. We've got a lot of questions, and I'm trying to structure it. But I'm going to kick off with one, mostly because it's slightly self-serving. Jane in West London says, I've been following Xian's webinars on employee share ownership with interest. Add out of the way. To what extent do you think employee engagement in financial services can be enhanced by technology, and to what extent by share ownership, and to what extent is there engagement overlap between those two things? Because just as you've done with the payroll, one could imagine that you're actually also adding to HR and payroll the kind of the employee share ownership.
Yeah, I would say that one area would be with the remote workforce, and I think that's perpetuating into the future. For companies that haven't made that investment in a remote workforce, I think that's something that clearly is an area for investment to drive engagement. The other area I think kind of segue into that is with respect to recruiting. By having, if financial services has a difficult time in recruiting, there's statistics that say it's one of the industries with the highest number of unfilled job requisitions of all industries, which at least in the U.S., I can't speak specific to the U.K. on that, but So talent clearly is a big problem in terms of recruitment and getting the right talent, especially in technology. And having policies and features, capabilities around remote work, I think is a way to attract some of these users that have the skills that I think a lot of companies are looking for in terms of talent voids in their current organizations.
Now, Jeremy, who works for a U.S. investment bank, applauds you, actually. He points out you've really tapped into a lovely area of credit by picking up that on-demand pay. And I must say, you had me giggle when I saw the Dayforce wallet. I thought that was very good. We've got quite a few people who are looking at connections, because when you go to the Ceridian site, you see HR and payroll is prominent, and the analysts put you in
Right.
that box. So I'll start with a few. There's almost a number of radial spokes people would like you to expand upon. So Catherine Riley is kind of, what about healthcare services? What sort of things are coming out in that space?
Yeah, so that's a great point. So I know healthcare in the UK is very different from the US, but there is also we just recently announced some emerging technology around healthcare that we call it healthcare decision support. And it's really what that means is so when open enrollment happens in the U.S., there are various options, and they all have different things they cover and different things they don't cover, and really there's a lot of intricacies under the covers in terms of understanding which is the best plan for you, not just from what's going to cost me the least amount every paycheck in terms of the deduction, but at the end of the year, which of these plans is going to result in the best value scenario for me, the least amount of money out of my pocket. And what decision support tool does, it's very sophisticated. It's actually an AI-based tool that crunches all sorts of data and outcomes and regionalizes the various differences in healthcare costs across different parts of the country. And it is able to make a specific recommendation for you based on just answering a couple of simple questions. Things like, are you going to do any elective surgery in the next year? Do you plan on having a baby? Things like, do you smoke? So questions like that. After answering 4 or 5 questions, this tool is able to drive you to a specific healthcare plan that's going to be an optimal solution for you to sit in place. That's an example of emerging that's driving. It's not only a healthcare benefit, but ultimately it's less money out of your pocket. So there's a financial benefit as well.
Okay. I've got a question here from Anna, who's a lawyer. She's curious about anything you might be doing on whistleblowing.
No, that's a new one. But yes, Anna, I can certainly follow up with you on that. That's an interesting idea. I think something that if it's not in our R&D pipeline, maybe something we'd want to consider.
Okay.
But certainly, yeah, the ability to protect the identity and how is that handled internally. There's all kinds of compliance rules, I'm sure, associated with that.
Okay. Rakesh says that there's a lot of discussion about gamification in the workplace and in training, in particular. Do you have any good examples of that?
I know we are working on gamification in some of our product, various functional areas. I don't have any good examples of that yet, but I know that is something that is coming to our platform in the near future.
Okay. Andrea is curious about any work you're doing to integrate with some of the MOOCs out there on some of the training as well.
Yeah, I think we have integrations with all the leading vendors in that area to input their content to make sure that we're able to deliver various regional specific, industry specific content based on what type of vertical industry you might be in.
Bob McDowell is sort of curious, how important will government sponsorship in the broadest sense be to the focus and direction of technology as part of economic recovery in this space of employee relations?
Yeah, I see very little of that. I don't see any kind of direct involvement of government in this area. Other than, I mean, there's certainly certain rules around on taxation, some forgiveness around that related to COVID, delaying certain taxes, but all of these are kind of already happened. I don't see any new ones happening on that front in the near term.
Mhm. Question really from me. When we were warming up, you were talking about the implications of COVID on the workplace. I'm sort of curious. People talk about, is it going to be a V or a U or an L-shaped recovery? What are your thoughts about going back to the office? How much of this is permanent, or how much of it is doomsayers saying that we'll never go to an office again,
Yeah.
or we'll always be stuck in offices?
Well, I actually put a lot of thought into this question. It comes up a lot in our business, as you can imagine. And what I think the answer is that things won't be the same in the future. I think this kind of experiment of remote working has been successful for the most part. But in the future, I don't think it's going to be a flip the switch back to the way it was. I think many people will continue to work from home, but I kind of see this hybrid sort of scenario evolving where many workers that were otherwise commuting into the office every day maybe only commute in 1 or 2 days a week. And so a couple of changes, ramifications of that type of model are, think of the employer now, you no longer probably want to have a dedicated space for every single worker because a third of them or half of them are only working in the office 1 day a week. So maybe the adoption of what they call hoteling, a former consultant, we used to use this all the time. There was never a sufficient office space for all the workers. There will only be kind of a percentage. And there's a scheduling mechanism to make sure that you've got a place to park. And the flip side, on the employer, they could certainly reduce their footprint of real estate, especially financial services. These companies have lots of expensive real estate in pricey locations in downtown London, in New York, and San Francisco. And to be able to reduce that by a third or a half, that's significant saving. We expect to see that in the future.
Yeah, so I think people forget that the way that they wish the workplace is one thing, but when the bosses are making money, it's going to be a little hard to prize it out of them, and even harder if your competitor is not adding those overheads. Robin Davis has an interesting comment, slightly political. I feel that much of the engagement is due to upper management, CXOs being ineffective. What is there for employees to keep their superior hierarchy honest and accountable, working in their interests and doing the right thing in the right way at the right time? So sort of an upward management question, similar, I think, in respects to the point about whistleblowing.
Yeah. So, they call that employee 360 in some cases. Having a mechanism to report on not only the people below you, but the people around you and the people above you. So certainly in many places where I've worked, that was part of the annual review process to make sure that messages were flowing in both directions, not just as the questioner asked.
Well, when we were doing warm up, we were talking about too often it's been management by attendance. Deborah Webster's come in with a question. If engagement levels have dropped so much, as per your slide, the Gallup poll, won't remote working see an increase in surveillance technology to monitor people's inputs?
That's a very timely question. I read something just this week about Microsoft Teams embedding exactly that ability of monitoring capability into the Teams Microsoft platform. Whether or not companies will adopt that, there's kind of potentially privacy issues, but and I think employers are very much in their right to do that. So I think the answer is yes, you can expect to see this. But again, I think in certain industries, maybe the employees might have some leverage to push back against it and say, we don't want this, or they'll choose employers that don't make use of it. So it's really very much an open question, but I think the technology is there. It's coming. We'll see more and more of it. It's just a question of will companies choose to use it or maybe use it in certain pockets of employee sets.
Yeah, so you've really stirred a lot of things. Just a quick final question, if I might, Patrick, in the time. This is from a different Jane. How do you think the employee landscape will look next year in terms of talent available, and how can technology help with that? And it's just yet another sprog that hangs off that HR payroll area.
Yeah. Yeah, no, so I think, I think the answer is there's an improvement. Now, certainly I talked, and I think the first question was somewhat related to this about the demand for tech workers. But if you're limited, to a certain geographical area in terms of your recruitment, and now that restriction is gone, at least for maybe a portion of your employees where they don't need to move to within commuting distance of your office anymore. You can have them working anywhere, virtually anywhere. Now that opens up a lot more potential recruits for your company. So if companies use that mindset to say, I'm no longer requiring someone to move here, I'm making virtual work an option, I think that will open up a lot of doors for the companies that are the early adopters of that kind of a model.
Hmm. Well, Patrick, we've come to the end of time, sadly. I've got a number of thank yous and comments coming in. Always a sign that we're running close to the end. But I thought I'd just read one out. Ian says, do thank you for a fascinating talk. And I heartily endorse Patrick's central thesis that regular engagement with staff using technology is a way forward for financial services. So spot on the mark there for Ian. What I might just point out, in my experience, one of the things I find amusing is the very early origins of computers in business back in the 60s was really for payroll, and everything was sort of kind of done backwards. We only wound up with CRM systems sort of in the 90s, where I thought all sales started with a business card, but now it was payroll and invoicing that we did first, and now we're finally having begun there. Really getting into what really matters. Oh, you can't even have a company if you don't have people. And we're finally getting technology to engage with that. So it's been a fascinating look. You've stirred a lot of ideas in the audience. And I thank you so much for appearing on the program today. I get to do that because I get to thank you as well as a sponsor, as one of our tolerant sponsors who lets us wander around a whole variety of interesting subjects. And those subjects are coming up again over the week. We're going to be looking at the fintech crown of London. Does the rhetoric stand up to scrutiny? A global one, again from the US, on data gravity and its effects. And then next week, a number of other sessions, all of which, as ever, are on the website. And I'd encourage you to go and browse ones that you'd like to see. Patrick, I can't open the floodgates as yet with our software to give you the hearty applause that you deserve. But I do keep a little piece of technology here, which I got in a Korean temple in Bulguksa. And this is my Korean karmic clapper. So I thank you so much for appearing. And I look forward. It sounds like your IT department's a fun place to be. Good. Thank you.
Yeah, I hope we can come back again soon. It was a pleasure. Thank you.
Like that.